Hello and welcome to this webinar focusing on a really challenging and exciting topic, which is managing the maelstrom of compliance risks in 2023. My name is Pekka. I'm the Vice President of the International Compliance Association, and I'm delighted to be hosting this webinar along with the Asian Bankers Association. Thank you so much for joining us wherever you are around the world. And I'm delighted to have my colleague Masud joining us, who I'll introduce in a moment. But first of all, just to say, in terms of the regulatory landscape we've all seen this year, what an amazing and tumultuous half of the year we've had already. We've had the FTX scandal, which has sent shockwaves through the world of virtual assets and crypto, and raised huge questions about the way we can regulate crypto, and also the connections between the crypto world and the traditional financial services world. Then, of course, we've seen big scandals in the US and issues particularly with Silicon Valley Bank, and again questions around managing risk, managing compliance, and the effectiveness of regulators. And of course, then we've seen further shockwaves with Credit Suisse, and the long-running challenges faced by that bank, and then, of course, the financial turmoil that resulted. So what we're going to do today is really focus on the big picture around, what can we learn from some of these big scandals, some of these challenges? What are the main takeaways for compliance professionals for managing risk, whether you're in, directly in a compliance role, or whether you're in a senior management role in your organizations. So my name is Pekka. As I say, I've been in industry for many years as a money laundering reporting officer, head of financial crime, worked in compliance, and as part of the ICA, I've worked with large tier 1 institutions all around the world, as well as training regulators, law enforcement, and all sorts of different industries, including fintech, actually, and crypto. So delighted to be with you today. I'd like to introduce Masud. Perhaps Masud, if you could say a little bit about yourself from the Bangladeshi FIU. Great to see you again. We saw each other recently, didn't we, in India? So thank you for joining us, and welcome. Would you like to say a little bit about your background to our audience, please?
Hi, Pekka, and hello, dear audience. Let me introduce, first of all, I would like to thank ICA to invite me to speak something on the recent financial crime compliance area. Let me introduce first I have been working in Bangladesh Financial Intelligence Unit for almost 18 years. And with the passage of time, I did work in the investigation, strategic analysis, gap analysis, risk assessment, research and studies, drafting law, rules, policies and strategies from the BFIU. Perhaps for my international audience, I work for Bangladesh Financial Intelligence Unit, which is the national central authority to prevent money laundering, terrorism financing, and proliferation financing. And it is not just the intelligence center, it has also entrusted with the supervision function, as well as the BFI have some quasi-judicial power, like BFI can freeze the target and freeze the asset up to 7 months. So this is in short BFIU. And my personal background, I am finance. I did MBA in finance back in 1997. Thereafter, I have completed double masters. One is in intelligence and counterterrorism. Another is in international security studies from Macquarie University, Sydney, Australia. And as you know, the current world is moving towards digitalization. That drives me to get some credential in this area. That's why I did completed a master's equivalent degree. This is certified digital finance practitioners from Fletcher's Schools of Law and Diplomacy from Tufts University, USA. I did engage in several international teams, like I did consultant work as a mentor or consultant for World Bank, KDP, European Union, and APG, and has assisted many government authorities within the South Asian countries to build their effective and efficient anti-corruption and AML safety regime. I was also part of the mutual evaluation team of Cambodia, Sri Lanka, Bhutan, and partly for Taiwan as well. So I have written a book which is called Anti-Money Laundering and Compliance, Combating Financing Terrorism Compliance. And I have some article as well on anti-money laundering, counterterrorism, violent extremism, corruption, digital identity for building digital economy, digital banking, virtual assets, and digital insurance as well. This is in brief from my side. I think Pekka, on you.
Thank you, Masud. Yeah, thank you very much. Thank you so much for joining us. So look, a great background there and really well qualified to talk about the topics we're going to cover today. So I just want to set the scene a little bit for our audience. So first of all, just about the ICA, we are the leading professional body for the global regulatory compliance community, and our qualifications are recognised as the benchmark of gold standards. But what we're trying to do is help raise standards all around the world. And we do this by forming partnerships with regulators, the private sector, banks, FIs, other regulated firms. And so I think it's really important for us to work with organisations like the Asian Bankers Association to have sessions like this to talk about the lessons we can learn from some of the recent challenges. So, let's just set the scene a little bit. So we're talking, if we start with maybe FTX, just to remind ourselves, FTX was a crypto exchange which was worth $32 billion, incredible amounts of money. And then it went to filing for bankruptcy. And a lot of people have called it the Lehman Brothers moment of crypto. And people have compared its founder, Sam Bankman-Fried, to Bernie Madoff. Now he was the founder, Sam Bankman-Fried, of FTX and Alameda Research. And again, by the age of 30, he was held up as the golden boy, wasn't he? But the collapse of FTX has shaken up the entire crypto world. Congress, the SEC, they're all investigating. And regulators around the world are kind of asking lots of questions about the future of regulation. I know Masud will have some thoughts on this. Then, of course, we had Silicon Valley Bank. Now, again, I knew people in the UK that were employed by Silicon Valley Bank, and I think they were bought by HSBC, weren't they, in the UK for sort of £1, their UK operations. But again, that continues to knock on around the world. It's affected bank shares. It's knocked on to Credit Suisse, as we'll see. Again, it was I think over 200 billion worth of assets. It very quickly collapsed. And it probably triggered the biggest crisis we've had since 2008. And again, there's no one answer with what caused that collapse, but some people have said it's because of the Trump decisions to roll back some of the regulation controls around reserves and lending and separation. Others have said it's the fact that the bank didn't manage risk properly and senior management weren't properly engaged. And then obviously we've also seen big sharp interest rate rises after lots of decades of ultra low borrowing costs, or was it actually a combination of all three of those things? And then probably the granddaddy of them all, really, Credit Suisse. Who at its peak again in 2007, Credit Suisse was worth 100 billion Swiss francs. And again in March, UBS bought it for I think just around 3 billion Swiss francs. And again, how old is Credit Suisse? Goes back to 1850s. Incredible. Yeah. And again, this one is an interesting one as well, because maybe it was to do with miscalculation of risk or being exposed to maybe overvaluations in the property market. But with Credit Suisse, there wasn't really that exposure. It was just scandal after scandal after scandal, wasn't it? And was that what brought it down? I mean, we saw all over the world, that there was money laundering scandals, Japanese organised crime, Bulgarian drug dealers, bribery and corruption all over the world, tax evasion, corruption in China, Hong Kong, again linked to collapses with hedge funds. Again, we had all sorts of cultural problems in that bank, and the shares have been sliding, haven't they, for years. So this is kind of the stuff we're going to dive and talk about with Masud and have a bit of a fireside chat with this. But we've got an hour to do this, and there will be some poll questions for you to answer. So we'd like you to get engaged. Please do speak to each other in the chat. Let us know whereabouts in the world you are. I'm having a bit of problems with my computer setup, so I'm on my iPad, hence the strange angle you have me at today. But it would be great to hear from you. We're going to be asking for your thoughts, your questions, so please do let us have that as well. And we will have the chance for you to ask questions for myself and particularly Masud as well. So please do let us have your questions in the chat function. And we're actually going to start by launching our first poll, if we may. So can I ask for our first poll to be launched? And let's get the thoughts from the audience. So there we go. What are the reasons for the collapse of Credit Suisse? Let's get some questions from some thoughts from the audience. There we go. I can see some responses coming in. It's a really interesting question, that. We'll give it, we've got good participation now. Everyone's getting their thoughts in. Let's have a look. So give it, it's moving up there. I don't know if you can see that on the screen, Masud, as well. We'll give you another few seconds. Okay, so you can see some interesting movements there going on. So just while we're waiting on that, Masud, what are your thoughts on some of the recent regulatory shocks that have come through? As we've gone through 2023, and we're thinking about these big shocks that I've mentioned, Credit Suisse, Silicon Valley, FTX. What do you think are the most critical financial crime and compliance risks that organizations are currently facing? So, are there specific areas for you, like corruption, maybe, or other areas that you think deserve specific attention and mitigation? And before you answer that, I'm going to end the poll, and let's see our first results. So could we end the poll and share the results? I think I can do that. There we go. So look at the results of that first one. So a series of scandals, 42%, followed by shortage of liquidity, a significant percentage as well. And then we've got significant consecutive losses and management turnovers. So just before I actually just get your thoughts on that poll result, Masud, do you agree with that, the audience there, or do you think it's a bit of a combination of factors? What's your takeaway from that?
I think the audience are really spot on all the issues, because the Credit Suisse actually suffering for all the issues, but I can't see that what are the other reasons in the chat box. There is a series of scandals and significant consecutive losses, management turnover, shortage of liquidity. Everything was actually replicated there.
Yeah.
Can you share the other reasons from the chat box?
Yeah, let's have a look, shall we? The chat. So I'm just going to go into the chat and see what we've got. So the other reasons that were given, let's see if we can find that. I've got hosts and panelists here, everyone. Let's have a look. Can I ask our moderators if they can try and find it in the chat? Because I'm afraid I'm struggling to find it, the other reasons.
No, it's just no, it's just I think though the percentage becomes slight more or less, but the answer is actually the all. So let's get back to your question, Pekka.
Yeah.
Let me start with some statistics, because in case of the financial crime compliance, last year and this year, early this year is very, very eventful, because if you look at the last year we had the highest ever cumulative penalty due to MLCFT or financial violation of financial crime compliance, or almost $22 billion.
Wow.
And within the big penalties, you can see many big names. For example, the Danske Bank fined over 2 billion defrauding their investigator. Santander Bank UK paid around 108 British pound for the compliance gap. Even the Credit Suisse as well paid almost 240 million euros to settle their ML investigations issues. And the beginning of this year is also much more eventful, as we've seen the collapse of Silicon Valley Bank as well as Credit Suisse. And you mentioned firstly the crypto exchange, that is FTX. You wanted to talk me what are the other regions, or is there any corruption or such issues actually associated with this failure or not? I would say the Silicon Valley Bank is the classic example of failure to risk management. However, if you look at the Credit Suisse and FTX issues, you will find that there is a complete case of corruption and complete breaches of financial crime compliances. Because you can see that Credit Suisse has failed several times to detect very big money laundering scams, like, as you mentioned, Bulgarian cocaine, tuna bond fraud cases, and they defamed as well as in the Panama paper leaks. And altogether, even the court has an observation against them. Court has indicated that there is a severe AML-CFT deficiencies lies within the Credit Suisse bank. And just move on to FTX. It is
before you move on to FTX, Masud, why did Credit Suisse keep getting scandal after scandal after scandal around financial crime, whether it was money laundering, whether it was bribery, whether it was tax evasion? What for you were the common denominators?
I can quote the court's observation. While several cases are actually tried within different courts, and most of the court indicated there is a severe deficiencies in the AML-CFT or financial crime compliance. Actually, these severe deficiencies actually unable to detect them, these financial, different financial scams and that sort of thing, and which led them to actually face the penalties as well. And
before you move on to Silicon Valley Bank, we do have a second poll, and because I know you've got some good thoughts on what happened with Silicon Valley Bank, and maybe what we can focus on there. But yeah, if we could launch our second poll, please. Which again, I spoke a little bit about the context behind Silicon Valley Bank, but can we ask our audience what do you think were the main reasons that SVB filed for bankruptcy? Let's get to see what the audience has to say on this one. We're getting some good responses coming in already. So this is an interesting one. So we've heard already from Masud that the main failures perhaps with Credit Suisse seem to be that consistent failure in financial crime compliance controls. And I think we're going to unpick the reasons perhaps for that. But we're getting some good responses coming in here. Just looking at those as we go through. Okay, so while we're waiting for those responses to come in, Masud, what for you? What were the main reasons that SVB was seen as a very dynamic, very successful organisation? Let's jump into its downfall and the context around its failure. So from your perspective, what do you think were the primary causes of Silicon Valley Bank's failure? And have you got a similar example, and I believe you have, from Bangladesh as well? I'll just end that poll in a minute. But yeah, what do you think, SVP? What's your take on that? And the Bangladeshi perspective as well would be interesting.
Yeah, let me answer the first point. What are actually the several causes to fall the Silicon Valley for downfalling the Silicon Valley Bank? Let me just explain bit more about the problem, how the problem actually arises. As I have said, the Silicon Valley Bank is the classic example of failure of risk management. So you all know that Silicon Valley Bank, founded in 1983, was the largest US bank dedicated to serve the technology and the innovation sector. And many big names even associate with the Silicon Valley banks like Apple, Google, Amazon. So the problem happens just immediate after the COVID, when the US economy injecting money into injecting money into their economy to boost up their economy. So in conjunction with the pushing the money into the economy, as well as the Ukraine war, the US has faced the highest ever inflation rate, which is around 10%. And to handle the situation, then Fed has actually adopted the reverse policy, that tightening the quantitative easing activities, and they increased the policy rate up to 5%. And such tightening policies actually impacted on the liquidity of the Silicon Valley Bank. And at that moment, on March 8, the Silicon Valley Bank announced that they have lost around 2 billion selling their bond portfolio, as well as shared their plan to raise almost 2.25 billion USD to manage their liquidities. And within this, seeing this announcement, Moody's and Standard & Poor's degrade their sovereign rating from B to C. And that would impact actually their share price, stock price, as well as their liquidity crisis, because I, along with one of my Indonesian colleagues, actually write an diagnostic article on the failure of Silicon Valley Bank. And in that, our piece of work, we found all the things our participant has mentioned, that is asset liability mismatch, loss in selling bonds, shockwave of other bank failure like Credit Suisse, FTX, and shortage of liquidity. However, we have found an interesting point in our piece of writing. We found, because the Silicon Valley Bank has collapsed, if you look at, let me just compare with the Credit Suisse. If you look at the Credit Suisse, it took 4 to 5 years to fall down the Credit Suisse. But if you look at the case of Silicon Valley Bank, it took less than 48 hours to be collapsed.
Wow, yeah.
So actually, I and my Indonesian colleagues are very curious to know why actually that happened so quickly. And one of our interesting findings is that the power of social media, that actually causes serious damage to Silicon Valley Bank, because when they announced their loss by selling bonds, when they announced to raise their money by to solve their liquidity crisis, it goes to the social media, and some people actually spread it out over the social media, and some people even ask their friends and families, okay, you withdraw your money, otherwise you will not gonna pay it by the, that is actually bank rush. It creates a bank rush, and the people go to the bank branches and withdraw the money. And unfortunately, the Silicon Valley Bank actually can't repay the client money. And that's how within 48 hours, the Silicon Valley actually went for the bankruptcy. So
do you think that was particularly also exacerbated by the nature of the clients, given that they're very tech savvy? Typically, a lot of the clients are going to be very engaged with social media. Yeah.
because we are passing the fourth industrial revolution. Now everyone is very much attached with the technology, attached with the social media and this sort of thing. So the news, bad news, good news, rumors, even propaganda just spread across the world just within a couple of minutes. And that's happened with the Silicon Valley banks.
Yeah. And okay, so what about I gather there was a Bangladeshi kind of equivalent of the potential to have a local Bangladeshi version of the SVB collapse. But do you want to maybe talk us through what happened there, Masud?
Yeah, I don't want to mention the name, but one of our bank actually faced the similar social media, I would say social media propaganda. And we have actually overcome this problem. What happened? That bank actually breaches the prudential and AML regulation, obviously. However, there are some news published in the newspaper, and some people who are actually politically motivated and spreading this propaganda with their malified intention to the social media and said, okay, please withdraw money, otherwise we will not get it. So this news is hugely spread among the communities, and people go to the bank branches and withdraw a lot of money. At that moment, our central bank inject liquidity for that particular bank as a lender of the last resort. But this is not the only thing we have done. We also, from the FIU point of view and the law enforcement point of view, we took this matter very seriously. And the FIU law enforcement agencies work together and encounter those social media propaganda, arrest few person who actually did this for the malified intention or politically motivated intention. And that's how actually we together, central bank, FIU, law enforcement agency can protect that bank to be the failure one. And recently, I just mentioned one findings of Deloitte. Deloitte, one of the big four company, they have also addressed these issues, and they mentioned in one of their report that negative publicity among the financial institution cause all possible consequences for a organization failure like a financial institutions if they do or they don't manage the money laundering risk.
Yeah, just how do you think firms can manage that risk of malicious or inaccurate information being spread on social media, Masud? Do you have a view on that? Do we need to really make strong policies around this or advise staff, counterparties?
This is a very good question, because we have actually faced this problem. That's why immediate after this problem, we actually advise our financial institution to build at least a small dedicated team to monitor the social media so that any negative or adverse publicity against them, whether coming or not, if they found anything, we advise them to report to us or to seek for the law enforcement assistance.
Yeah, because I guess it could be criminal offences here, couldn't there? Presumably, or at the very least,
misrepresentation.
Exactly, and as you say, people may be doing this deliberately to try and drive share price down. Or there could be, market abuse, market manipulation going on as well, couldn't there? So very, very important area. This, and I guess, given a lot of the apps are disappearing, like Telegram and not just WhatsApp, the messages disappear in real time. There's a lot of really difficult compliance issues here. I think that firms have to wrestle with. Okay. So I think. Anything else to say about the SVP as compared to, say, what happened with Credit Suisse? What would you say are there similarities or differences between the two failures for you? Do you think they're fundamentally different?
I think both are fundamentally different, but we are the people of financial crime compliance world.
Yeah.
If I look at the financial crime compliance, then both are similar, because
Yeah.
the Silicon Valley Bank also unable to manage their risk, as well as the other two we mentioned, FTX and Credit Suisse, say they are also unable to manage their risks. But they are distinguished in one case. If we correlate with the breaches of the regulation, if we distinguish it or draw the fine line between whether this is corruption or this sort of thing, then I should say the Silicon Valley Bank is not falling down for the corruption issues. However, if we look at the other two, FTX and the Credit Suisse, corruption and breaches of AML safety regulation, that is financial crime compliance regulation, is one of the major impactful area for them.
Yeah, yeah. It's at the heart, isn't it? Yeah.
Yeah.
Okay, well, on that note then about sort of anti-corruption and financial crime controls, I think we have a third poll, and then I'm going to ask Masud to maybe think about best practices around kind of robust.
Can I just jump in?
Yeah, please.
Just to our audience, all the questions, some might have more weightage, some might have less weightage, but don't take it otherwise. You all are right, because all answer of these two poll is right. So which answer got least is weight or least score, that is also right. So nothing to be worried about it.
Yeah, and some organizations may feel very comfortable with their anti-bribery policies. Yeah, great. Okay, thank you. So you can see the answers coming in there. It looks a fairly even split at the moment about implementing anti-bribery corruption policies within your organizations. So it looks like we've got a fairly even split. Some people have faced specific challenges, others generally not too many about getting it implemented. But I guess my question as those poll results come in for you, Masud, will be, you know, we've seen from FTX, we've clearly seen from Credit Suisse that, you know, having effective anti-corruption policies is absolutely crucial in making sure your institution has that integrity. But on your experience, what strategies or best practices would you recommend for making sure your anti-corruption policies are really working and they're robust? So what works well, but also what are the biggest challenges in getting those anti-corruption policies actually being effective and working?
Thank you, Pekka. But before move on to framing the anti-corruption, or I should say financial crime compliance policy, I'd like to draw some other things which is actually very relevant while framing the policy. Because what is your policy actually you are drafting for? To fight against financial crime, isn't it? So if you look at, so your policy must have some material, or your policy must be updated within the recent trends and typologies of the financial crime. So if you look at the top ranking financial crime, you will find it is fraud, it is cyber financial crime, it's smuggling, drug dealing, trade-based money laundering, use of shell companies, and so on. However, you also need to, while framing the policy, you also need to update it with the recent changes of risk landscape, which you will find from the FATF, which you will find from your risk assessment, which you can find from the APG typologies. So very recently, perhaps you are aware about that, the FATF has recognized something interesting, that is environmental crime is one of the most emerging financial crime that criminals get almost around more than 200 billions per year. And it covers wide range of criminal activities like illegal logging, wildlife crime, then waste trafficking, this sort of thing. Similarly, if you look at the APG typologies report to 2022, and you will find a new things, that is illicit financial flow from illegal, unreported, and unregulated fishing activities. So while framing the policy, you need to look at all the things, and you need to actually frame the policy so that you can take the control measures against those. Even if we look, as I said, we are passing in the fourth industrial revolution. So to me, the top ranking financial crime which need to address by the policy or strategy is cyber financial crime. Cyber financial crime through SWIFT network, cyber financial crime through ATM network, cyber financial crime through card network. And in this area, the financial institution is directly actually attacked, directly, fall into danger. And if you
so what you're saying, Masud, is very important to make sure that your policies and your processes reflect the reality of the latest financial crime threats, because it's not academic. If you just write a policy and you're not keeping up to date with the latest typologies, the latest risk of what crime actually looks like when it touches your firm, whether it's someone smuggling pangolin, or whether it's someone smuggling human beings or doing environmental crime or whatever, you will fail. So make sure it links to the real world. I think that's a really, really interesting point. Yeah,
that's why the FATF Singapore presidency has given highest emphasis in the cyber financial enabled crime. And just coming back to the policy should be, as I said, updated and match with the recent trends and typologies. But when you frame the policy, you need to have a collaborative approach. That is, conduct a risk assessment, and the policies will be based on this risk assessment that have the right due diligence procedure, that have the tailor-made training and capacity programs, so that you can share the outcome of this strategy or policy to all the stakeholders. So it should be in a collaborative approach. And
so get the business involved. Get the business involved. Yeah.
And policy should be crystal clear and very elaborative. So, and even in some cases, put some examples so that down the line, who actually implementing those policy, he or she can understand the policy, what needed to be done.
Yeah, we're getting lots of questions coming in, Masud, from the audience, which is great. So we will go through those questions. Should we take a few of those questions now, actually? Let's do that. I know we said we were going to do it at the end, but let me just have a look. It'd be interesting to get your thoughts on some of these questions as well. So we've had a question from Aminul Islam. Thank you, Aminul. How are people practically trafficking money from the third to the first world? Why first would open and make easy entry of black money to their economy? Well, great question. I mean, look, I'm here in the UK, and we know that arguably, I think London is the world's #1 centre for money laundering. I don't know what your views on that are, Masud. But I think, look, it's clear that a lot of illicit wealth moves from developing economies into developed economies, doesn't it? And I wouldn't say it's as simple as kind of east to west. I would say developing to develop. So, for me, the #1 way that it happens is trade misinvoicing, trade-based money laundering, where you have corrupt government officials moving value through illicit and trade. And we see a lot of this, don't we? We see the use of trade misinvoicing, and some of you, if you're looking for more information on this, there's a fantastic organisation, Aminul, called Global Financial Integrity, GFI. They're a US-based research body funded by the UN and others, and they do amazing research on how developing economies lose billions every year in illicit trade finance, illicit not just trade finance, but just cap flows through people undervaluing goods or lying about the existence of goods. And as Masud mentioned, the use of shell companies to actually cover the flow of money that isn't connected to legitimate business. It's just moving money that's been maybe obtained through corruption or tax evasion. For me, that's the number one. But we also, of course, see huge amounts of money laundering through shell companies, where you've got the help of corporate service providers and enablers. So the other big ones for me are the gatekeepers, which Masud will know about, lawyers, accountants, and real estate agents. Again, real estate, buying lots of real estate, whether you're buying real estate in the UAE, you're buying it in London, you're buying it in Singapore. The facilitation of buying real estate is another one as well. Masud, I don't know if you wanted to add your views to that question that came in as well.
Yeah, I would like to add with you something, Pekka, because we have because we are the source country, as you have mentioned, the GFI report, and the GFI report said that you have rightly mentioned, from developing to developed world, around 8 trillion USD actually transferred every year, and
we think what that money could do, Masud.
We see the
think what that money
trend.
Could do. It's incredible amounts, isn't it?
Yeah,
incredible amounts.
So when we do our research, I will get back on the GFI later. When we do our the developing and developed world, actually the people from the developing world allure for the developed world, because they want to actually enjoy the good social service, they enjoy the good education, they enjoy the good environment, they want to live the safe life. And this actually, along with the other reason, this might be one of the main reason why actually this money siphoned out from developing to develop. And as I said, the global financial integrity, for us, we also recognize the Bangladesh is a source country, and a lot of money actually flying from Bangladesh to developed world. But how actually the GFI quantify the amount of this money flew from Bangladesh, we actually have some disagreement with the GFI results because of their research methodology. Because we found in one report, when they took the fund data, they said that it causes net inflow to Bangladesh. That means the money goes out and money comes in. The net result is money into Bangladesh. And within the same report, they use another data set and saying that net result is outflow. How come this could be in one report? So there is we believe that there is a huge methodological gap, but we agree we have, and similar developing economies like us have the problem of this sort of illicit financial flow, and the money is flowing to the developed economy. And I think there are some mental issues as well. As I have mentioned, we want to lead a safe and good education and good life, and that actually might provoke. And there are some other issues which actually I think it's a long discussion issues. In a short, this is from my side.
Yeah. And look, there is work going on with focusing on greater transparency of beneficial ownership of companies, which are often used to move this illicit money. Look, we're getting some great questions, so I'm just going to take a couple more questions, Masud. So Conrado Roxas asks, reasons cited in the poll are symptoms of insufficiency or lack of good governance in the boardroom. Please share us your thoughts. So the three big scandals, and someone also said lack of diversification. So I guess perhaps a lack of diversity in the senior management teams. But do you think these big scandals, does the buck stop with the boards? Do you think that that's at the heart of the problem for all of these big scandals we've been talking about?
That I should respond. There might be, there might not be, because in some big scandal, for example, credit-based money laundering, a bank issuing maybe 1,000 crore BDT or several hundred thousand USD issuing one person. If we found that particular industry has actually no base, the documents provide to the board for approval is forged, that might be actually the responsibility actually lies to the employees of the financial institution as well as the board of the financial institution. It's not worthy to say that board is aligned with these things, but at the end of the day, you cannot actually escape from the responsibility.
Yeah. Okay, thanks. So again, I think that but there is a commonality. Senior management ultimately is accountable, and we're starting to see more and more senior managers being held accountable around the world now, which I think can only be a positive thing, especially when it comes to compliance and financial crime.
I'm sorry, Pekka. Can I give one legal point in our case? Why I say is that at the end of the day, management or board cannot escape, because in our case, in our law, Money Laundering Prevention Act 2012 in Bangladesh, Section 26 is framed like that for in case of any negligencies, in case of any non-compliance, or in case of any money laundering issues, maybe arise from the very bottom position. However, all the liability goes to senior management and the board. And there is a provision, unless and otherwise, the board or senior management unable to prove that they have sufficiently done something to prevent this, then they can only escape. Otherwise, in our law, they are also liable. Even from a frontline desk officer breaches for any non-compliance, the responsibility goes to the senior management and the board by law.
Yeah, that's brilliant. Yeah, that's good to hear. In fact, we're just bringing in a new law in the UK, which is very similar, which is if an employee or a representative of a firm commits fraud, then the senior management is potentially liable unless they can prove they've got adequate procedures.
Exactly.
Look, there's another question that's come in from Mohammed, which is, are there crypto regulations in Bangladesh? Well, I said we mentioned the FTX scandal. What are the state of crypto regulations in Bangladesh, Masud? Do we have any yet?
No, we have actually, by our law is actually self-deterrent to establish the crypto trading or crypto exchange in Bangladesh. So we are in a position to ban the crypto. However, based on the FATF methodology, what we need, even we are not regulating the crypto, we are dealing with these things. Like we did the risk assessment, we did strategic analysis on the VA and VASPs. We are holding different local and international seminar. We are training our law enforcement and other stakeholders on the cryptos. So keeping on the status of ban, still we do comply with some requirement that as per the FATF recommendation 15. And now actually in Bangladesh, we are doing and we are practicing this sort of compliance as delineated in the FATF methodology of Rex 15.
Yes, great. Thank you. Okay, well, look, shall we? We're getting a lot of really great questions coming in, and I think we'll probably go slightly over time just to answer them. But I'm just conscious of we do have a poll question to launch. Could we launch poll 4, please? And poll 4, hopefully, which we'll launch in a moment, will ask a question around which particular aspect of your financial crime and compliance frameworks could benefit from improvement based on the lessons learned from the recent events and challenges we've been talking about. So let's see if we can get poll 4 launched. Maybe I can do that. There we go, it is launched. So yeah, I'm interested to see the thoughts of the audience there, and let's have a look. Because again, we're having a bit of a debate about what's driven some of these big failures, haven't we, Masud? So can you see the answers coming in there as we on your screen? Looks like, yeah. So I don't know what your thoughts are as you watch those live results come in. On
I can see the live results.
Yeah. Do you have any thoughts on what you're seeing there?
Yeah, I think how similar to poll 1, 2, we have actually designed the poll with all correct answers.
Yeah.
So in the aspect of financial crime compliance or improve the our strategy or policy on viewing the current scenarios or changing the risk landscape, actually you need to strengthen the senior management oversight, enhancing the internal controls and monitoring the systems, and of course the risk assessment. It's not the static process, it's a dynamic process. So you need to conduct risk assessment very frequently. And another thing is fostering the culture across the institution, because ethics, we see that building the high ethical standard across the employees can protect the institution in many ways, as well as in the financial crime compliance area. So enhance the compliance culture and ethical standard of the employees and continuous engagement with the employees of the institution is another impactful way to benefit from the improvement, because this is the way you can learn from the different angle, then you can improve your policy.
Yeah, I think engaging with the employees is so important. Someone's often spoke about culture. People have described culture as what people do when no one is watching. So trying to engage people to understand why it's important that we have ethical standards.
Yeah.
Not just because we don't want to get fined, but because we're doing the right thing to protect our society, and also protect the business and our jobs. I think that's really important. So look, we've had, I guess my last question for you before we finish up with just maybe fielding some more of the questions from the audience is, we've been learning about new regulatory landscapes all the time. We get new laws, we get new regulations. But on top of that, we've got to learn from some of these big scandals, haven't we, Masud? We've got to learn. So what lessons do you think we can extract from the stuff we've been talking about today to strengthen the frameworks and our programs for the future? What for you are the big lessons we can take away? And that's kind of going to answer some of the questions we're getting in from the audience as well. What do you think?
I think first of all, as we all are working in the financial crime compliance space, so if we can be updated with the local and international incident that is happening around with us, and that actually opens our mind. These things happening there, and there is no guarantee these things happen with us as well. So I would recommend that please do update yourself with the local and international or global financial crime compliance incidents, and then you think about how actually you can improve to see, or you can learn from this incident and replicate in your institution, that your institution might not be the victimized of that particular institution actually fall into.
Yeah.
So this is one thing I think is a good thing.
Yeah, brilliant. Okay. Look, here's so many great questions coming in from the audience. Thank you, everyone. We're not going to get a chance to answer all of them, but I do want to fire some at Masud. So here's one which comes in from Siddha Badahur Bahandri. I hope I'm probably pronouncing that badly. I do apologize. How do we control trade-based money laundering as a financial institution? Wow, that's a big question. But I mean, the ICA does do a certificate in trade-based money laundering, but I mean, look, there's a lot of controls you can try and put in, obviously, which is a very complex area, trade finance. But even open account trading without documentary trade finance is susceptible to risks. I mean, for me, a lot of it is about training your people so that they understand what trade-based money laundering actually looks like. Because trade-based money laundering is fundamentally different to traditional cash-based money laundering, placement, layering, integration. It's a different thing.
There is no short answer, Pekka. There is no short answer how to protect that trade-based money laundering. But if you ask me, I can say, okay, put in place a good policy, monitor the price, monitor the invoices, monitor the dual use of goods, then ports, then and so on. Actually, there is no short answer how to protect.
Well, let me give you a couple of quick ideas. First of all, you're looking for transactions that don't make economic sense. You're looking for inconsistencies in description of goods or inconsistencies in documents. You're looking for geography that doesn't make sense. So maybe goods are being moved a strange way or via a strange method. You're looking for strange third parties, sanctions. Look, it's if you're talking about trade finance, you've obviously got big bundles of paper. So, you need to train the people that are reviewing those bits of paper to understand what to look for. And again, there is a lot of advice out there now from Wolfsburg, from the ICA, from the International Chambers of Commerce, FATF. It's a really interesting area and very important. There was another question, Masud, I wanted to ask you as someone with great experience. Is the question has come in around how do we identify shell companies, especially in cross-border transactions? And there was a similar question, again, about how can shell companies continue to be used? What's your thoughts on making sure we spot shell companies and why are they still such a problem?
Yeah, in that case, there is, as our time is very limited, you can use the paid resources, and you can see where this particular shell company is registered, whether it is registered in the offshore havens or tax havens, and do your own research. Actually, to find out a shell company, you need to have a good research as well. So the sources, you need to collect the information from fusion of sources, maybe from open sources, maybe some paid sources, and then actually you will find that it's a shell company.
Yeah, and you're right. There's a lot of paid resources, open sources. There are some other red flags about shell companies, though. For example, the location. If it doesn't have a Google Earth, and if you do a Google Earth search and you find that the premises is doesn't look like a corporate, and obviously if they're just using a Gmail or a PO box. Maybe that could indicate as well, but also obviously the length of there doesn't appear to be any actual transactions or costs associated with staff or assets that could be a concern as well. Okay, so gosh, lots and lots of questions. Wow, so I'm afraid we're not going to have time to deal with all of these, and I do want to make sure that we've got a chance for Masud just to kind of wrap up his thoughts. So I'm just trying to think we can maybe get one more question. Here's one actually, which is an interesting one, which is comes from Shyam. Thank you, Shyam Pereira. How can artificial intelligence help prevent anti-corruption? I mean, I guess in general, what's your thoughts on the use of things like AI now in compliance and financial crime prevention, Masud? Is this something the Bangladeshi FIU is looking at and you're looking at yourself?
I can tell you that as the criminals are using technology, so we need to fight against them with the technology. In this context, the different technologies can help us a lot. In case of artificial intelligence and OCR, optical character recognition, you can use it for the client onboarding. Big data predictive analysis can analyze your customer behavior and your customer transaction as well as IoT, big data, artificial intelligence, machine learning can be used for the CDD measures and sanction screening. IoT, artificial intelligence, business intelligence, money laundering, blockchain technology can be used for the transaction monitoring as well as reporting the SAR, STR as well. So my advice would be to invest more on the technology to fight against the financial crime.
Yeah, and I would just add to that, there is now a huge amount of regulatory technology starting to use machine learning. Whether it's true AI, I would dispute, but it's machine learning and big data. So again, some of these tools are quite expensive, but they actually pay benefits, huge amounts, because if you have, for example, transaction monitoring or sanction screening that's properly using big data and machine learning, you're going to reduce the amount of false positives you have. You can save headcount with people having to review alerts. It can save huge amounts. And I know a lot of large international banks are now making really positive movements. If anyone's interested, do contact me on LinkedIn. I can put you in touch with some really good websites that kind of have a kind of an overview of all the regulatory tech solutions that are out there at the moment and kind of like evaluate them. They're kind of not for profit. So yeah, but it's exciting times. And this big data that Masud mentioned is great. And the only other thing I would say with new technology, a lot of the new technology is unlocking the power of public-private partnerships too. So people like Masud and the FIU working with the banks is amazing, you know, now and the technology is helping that, isn't it, Masud? So yeah. Okay, look, I'm going to take one more question from the audience, if I may. Let me have a look at a good one. So yeah, any advice on how we can develop or what we need to consider in developing policies for anti-corruption? It's a good broad question to finish with. Masud, any more advice on that?
Yeah, first of all, it should come from, it should contain the high-level management commitment, as well as it should be based on the risk assessment and incorporate all the implementation strategies as well. And if you prepare a good policy, good financial crime compliance policy, good anti-corruption policies, whatever it is, but you will definitely found a challenge or resistance from the inside, because naturally what we are, our mindset is not going for something new. So you will found some resistance from the inside. In that case, you need to have frequent engagement and capacity building to overcome such resistance with the stakeholder.
Yeah, great. Thank you very much. Okay, so I think we're at the end of time. Thank you very much to the Asian Bankers Association for hosting this event with ICA. Thank you very much to Masud. I'm going to ask Masud for one or some quick fire practical takeaways, really. Just what could everyone think about over the coming few days, weeks, and months ahead? Masud, I'll leave you for the final word. What are your key practical takeaways?
Okay, in that case, I would say that be aligned with the local and international incidents that are happening around you. So always be update with this and think about what actually you can learn from this and replicate your institutions. This is really important and crucial. And in this current age of digitalization, I would say invest more in the cyber financial crime to detect, to prevent the cyber financial crime. If possible, as we have already discussed, the power of social media, then that can damage a lot for you. So just build your one, maybe very small, at least a small dedicated team, so that they can find out what is going on against you within the social media or technological space. And last but not the least, use your common sense. This is my last message. So if you use your common sense, that would be really great. And this would not found in any, book. It's your common sense.
A great note to finish on, Masud. Thank you so much for your insight and sharing your knowledge with our audience. Thank you very much to everyone who's participated. Great questions. Apologies if we didn't get a chance to answer yours. Thanks again to the Asian Bankers Association, and we look forward to seeing you again at future events. Thank you, everyone, and have a fantastic rest of your day. Goodbye.
Hi. Thank you, everyone. Thank you, Pekka, and thank you, our colleagues from ABA.